It's
I'm like,
it's just an intense day, and there's a lot of emotion and feeling that just it's hard to hold in.
I'll just go ahead and leave now and go take care of my 17 children, according to John.
All thoughts and opinions shared in this recording belong to the participants. This podcast is meant to inform and educate and should not be seen as solicitation or endorsement for business.
Welcome to the Market Moment. This is Matt Walters here with John Martfeld.
Morning.
And Lee Mackey.
Good morning, everyone.
And it is election day. I thought about starting with like, dun, 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 breaking news. This is your election day headquarters, and we're going to be live streaming all day. But we're not. So, but yeah, big day, exciting day, depressing day, kind of depending on how you look at it. But I think we're all ready for this to be over.
I'm ready for, as they say, my regularly scheduled programming.
Yeah.
To come back to TV, and I'm ready for just some, boring commercials. And
I don't want to put words in anybody's mouth, but on behalf of the citizens of America, we are ready for this election.
We are.
Oh, yeah.
So
100%.
But yeah, big day ahead. We sent out a survey a couple weeks ago kind of asking you guys what were your biggest fears, concerns, questions, comments about the market. We really appreciate those who participated in that, had quite a few responses to that. So we're going to talk about some of that today, some directly, addressing kind of the upcoming election that's, underway.
Yep.
People are voting as we speak. So a lot to get to. Anything before we jump in?
No, this is a great day to be an American.
It is.
America.
It is. You wore your red, white, and blue.
Yeah, got my United States shirt on.
Very patriotic.
Yes.
Okay.
I feel so patriotic.
Okay, so let's jump into the survey real quick and kind of go over that. So you guys, we asked you quite a few questions about just kind of how you feel and what your biggest concerns are. So question number one, we asked, how do you feel about the overall economy? On a scale of 1 to 5, 44% of voters said 3, which meant kind of in the middle, not terrible, but not great. So that was a majority of the responses there. Question 2, how much do you think politics impact the stock market? 40% said 4, meaning 1 would mean it doesn't impact it at all. 4 was like very direct, big impact. A 5. And so 4 was the most common response. So they think, hey, politics impacts the stock market. Question number 3, what is your greatest concern when it comes to your investments? The most common responses were just general market volatility. Mm-hmm. Okay. That was actually the second most common response. The first most common response, which is actually kind of surprising me, is people said interest rates. So that's their biggest concern. And then it was market volatility, and then it was just current market valuations. Like, hey, we're kind of here hovering around and at all-time highs. Yeah. Like that just makes people nervous.
Yeah.
Right. I think that's true kind of regardless of what else is going on. So as we go through those 3 questions, anything that surprises you guys or any key takeaways there?
No, not me. I think the political question, like, do the politics matter? And the majority answered yes. Right. That one, we've talked about this on the show a little bit. Politics do matter, policies matter, but sometimes years later, as long as it's not a sweep by one party, usually the policies aren't going to go too out of whack either way. So I think that typically the whoever wins the White House, as long as there's checks and balances, meaning
Congress.
Yeah, the other side has.
Sure.
It usually doesn't affect it too much, right? Mm-hmm. It goes back to corporate profit. I think the one area that does matter is taxes. In this election, there's been a lot of talk about the widely different tax plans from each president. So,
the answer is to number one. How do you feel overall about the economy? I mean, it was just
Yeah.
In some respects, most investment accounts are up. So people have more money than they did probably 4 years ago. The economy's strong, but there's just this feeling from a lot of people. I think it's inflation. I think that inflation really puts a damper on a lot of the overall enthusiasm that's out there, that should be out there.
Yeah.
It just, kind of.
And if anybody put on their computer the national debt calculator that goes up every day by so much, that would put a damper on your spirits too. So, I think inflation and the national debt and just, some of our outrageous spending problems and so on, we don't really talk about, could cause some uncertainty. But then, on the flip side, the tech markets are still booming. We still have the greatest companies on the planet in the technology sector, and we're going to continue to innovate. And I think that's a very high positive side.
The question was the economy. I think some people, clients, otherwise, they interchange economy with
the markets.
With the markets.
Yeah.
Two very different things. I mean, how do you feel about the economy? Most people would say, man, the economy is great.
Unless they go to the grocery store.
But that was my point earlier.
Yeah.
The inflation has really, I think just hit everybody.
One thing that was kind of surprising to me is like geopolitical issues.
Yeah.
It wasn't one of the main concerns.
Yeah.
Interesting.
And I'm not saying it should be. It just there's a lot there's a lot going on.
Yeah, no doubt.
I mean, and there's a lot to be worried about from a geopolitical perspective, and but that wasn't one of the major concerns from the surveyians. Yeah, I don't, the people who took the survey.
Greatest concern number 2 was market volatility. That's interesting. I can see kind of rates.
We haven't had market volatility in so long.
We really haven't.
You think about it. I mean, we've had this wonderful run for so long. We've had a few brief moments where I go back to August. We had some, scary 2 weeks of trading that was volatility was a big deal. And then it just went away, and we went right back up, and we hit all-time highs again. Yeah. And that was a very brief moment. So volatility, I think maybe the fear of volatility coming back in, in this election could create, because the uncertainty of who's going to win. And I just had the Business Channel on in my office, and they were talking about the market starting today. And I always find it funny because the analysts were talking about, well, the market's up today. So immediately they go to, well, the markets must think Trump's going to win, right? Because everybody's just tying this thing that the market's going to do great if Trump wins, the market's not going to do well if Kamala wins. And that's basically based on tax policy and those kind of concerns. But we know, going through this forever,
it's just not that easy.
It's not that easy. I mean, through Clinton, Bush, on down to Trump
Biden.
And Biden. Exactly. The market doesn't care who the president is necessarily. Going back to that one question.
If the market can do well, never mind.
I know what you're going to say.
Okay.
Yeah. I agree.
Yeah. Yeah. So it really interesting. The comments that we got back. I got to be careful on here. So other comments we got one of them was how to avoid unnecessary taxes, the national debt, and then hedging or protecting against market volatility. So those were just kind of other general comments that we got from the survey. So taxes, John, you mentioned it. I think that's the biggest takeaway from this election, speaking from just, economically and, from the stock market's perspective. Yeah. That's, I think, what matters the most. And let's just be real about it. Our federal government's problem, and I think everybody needs to hear this, and everybody, I would hope, could at least agree with this to some extent, is our federal government's problem is not an income problem, right? It's not a revenue problem. It's not a lack of tax dollars being paid.
Sure.
That is not the key core issue at hand. And you can talk about who should pay what and how we should collect it and all of these things. But the whole mantra, the whole kind of vibe that you get from one side that like we need to, collect more and tax more and increase revenue. That's a slippery slope, and we're just not going to solve anything at the way we spend.
No.
The rate that is accelerated at over the last few years. Either party needs to understand we're not going to solve the problem by just trying to raise revenues.
Both parties, it's funny, it's easy to spend other people's money. We talked about that, the little comment last week. Mm-hmm. Well, it's very easy to spend other people's money and to spend it, not try to find the best. Like if it's your own personal money and your own budget and your own life, you're going to, if you're going to go buy a car, you're going to shop around, right? If you're going to do this. But when it's other people's money, you don't care about that stuff. So you spend it unwisely, which we've done in Washington, D.C. forever. I thought a couple cool little things from. I was watching the football game last night, and there was commercials for both Trump and Kamala. And Kamala's commercial came on, and she said one of her key points was she's going to lower taxes for the middle class. And then it kind of goes to that theme of the rich need to pay more. We're going to lower the taxes for middle class. And I look at that statement, I'm like, that sounds wonderful in theory, right? The middle class get a break. The upper class has to pay for everything, and that's great. The problem is when that happens, a lot of your corporations, your small businesses, your entrepreneurs that are considered the high earner, the higher earners, they're not going to hang around here and pay a bunch of taxes, nor are they going to develop products here when they can go somewhere else and do it. And then how does that affect the middle class when your employer leaves town? Right? The middle class then doesn't have a job. So the tax rate doesn't matter. And I think that's where economics and taxes and so on, it sounds wonderful to say all these great things. But again, unless you further tax, everybody that you think is going to continue to work, that everybody's going to just pay it. And remember, the upper echelon, if you want to call it that, they are always trying to find the best way to save money and to do the right thing efficiently. That's kind of why they're where they're at a lot of times. And they're not going to just stay here and take gut punch after gut punch so that.
Can you quit hitting the table? That's driving.
Oh yeah.
Nuts.
Oh, sorry. I'm making a statement here. I thought this was pretty cool, though. I saw this on a side note. I just want to get this out. Google searches last month in the U.S. alone, over 7.1 million people searched Google for financial advisor. Now, I find that pretty interesting, right? So in the midst of all this chaos and uncertainty, there are people reaching out to find somebody. And I'll share the kind of way I think about this. The tax questions, and people they're worried about diversification of their portfolio and risk and taxes and so on.
Well, the tax code has gotten so complicated and so complex over the years. I mean, this isn't a new issue, but just over time, government's gotten bigger, more powerful. They complicate things. Any kind of federal program, whether it's Social Security, Medicare, it's so freaking complicated and hard to understand and hard for people to navigate of what should I do, how should I file, and it's a real issue. And so that it goes to the value of having advisors, whether it's a tax advisor and a state attorney, or a financial advisor, to help you navigate those things. And going back to on the political side of things, right? I would encourage anyone out there to go back and look at history, going back to, literally the beginning of time, and go back and look at the nations and the empires that have come and gone, right? And look at what was their kind of ultimate demise. And a lot of times they got the government, the controlling people got too big, too powerful. It's a slippery slope that you just keep compounding. And the longer America, if we want to remain the greatest nation on the face of the earth, we have to, the number one way we do that is by not allowing the federal government to continue to grow and get too big and too powerful.
Amen.
Amen. And that's not a, hey, you should vote Democrat, you should vote Republican. That's just who should be making decisions in our nation. And it goes back to smaller government, more local authorities. And we're going to, it's you can go back in history and look at it, is all I'm trying to say. And it's not going to be a good thing if we just keep letting it compound and grow. And by it, I mean the federal government.
Between us, we have 24 kids. You have 3, I have 2, and Lee has a lot. So we know if you let your kids go uncontrolled, right? If you don't discipline, if you don't keep them in check, they'll go as far as you let them go. They'll go as far as
they'll push the boundaries.
They'll push the boundaries, right? We have an unchecked government right now that spends without anybody, no accountability, nothing like that at all. I always say, if somebody would run for office and they said they're going to shrink government, whether that be make the IRS codes simpler and so they could limit or cut IRS payroll in half, which you could do. This is not hard to do. There's so many departments in Washington you could cut out, and then you could turn things over to the state, like Department of Education. There's so many things that I wish we would do. The problem is, and goes back to if on the ballots, we went and voted, and you have those little sub things, like you vote for in Arkansas, we had a couple things. Well, why can't they have one on there why can't the American people, I wish we had a way to do this, vote for term limits? Because one way you can solve the national debt is term limits.
Yeah.
As long as these people have no term limits, they do not want to give up that free ride that they're riding right now. They're never going to vote for it for themselves, ever.
Right.
They're unchecked children, and they will not ever do the right thing. And so if we could vote as American people, it would be an overwhelming landslide for term limits. And then you could actually go in and have a strong stance on cutting budget and so on, because you wouldn't worry about the only thing they worry about right now, which is getting reelected.
Yeah. Agreed.
Shame.
I don't know what point we're trying to make.
I don't know. I'm just sitting over here watching and listening. I'm like,
it's just an intense day, and there's a lot of emotion and feeling that just it's hard to hold in.
I'll just go ahead and leave now and go take care of my 17 children, according to John.
I was over-exaggerating.
Hey,
you have more than us. That's all I was trying.
By the way, the tax code has 2,652 pages. So while y'all are over there bantering,
Did you read it all while we
I'm
were
looking up important facts
Yeah.
about how big the tax code is.
That's ridiculous.
It's so ridiculous.
More words in the tax code than all of the Harry Potter novels combined. So there you go.
That's good insight there.
Okay,
That's
y'all keep
good
going.
insight.
I'm done.
Hey, so
I'm worn out.
So speaking of tax code, you said that we were talking about this morning. They came out with the new contribution limits for next year.
The IRS slid this in on Friday, which is not a big deal. They do it every year. 401k contributions will get the contribution limits will go up by $500 next year. They kept the catch-up contribution the same, but for a lot of clients that we have IRA contributions, they kept fixed at $7,000. I think we were all kind of anticipating another $500 increase, which they've done, but they kept those intact. They did adjust all of the income
levels,
phase out brackets. So check that. We'll have that for our clients when they start getting published. But that was kind of slid in there on Friday afternoon. So it'll impact a lot of our listeners.
Oh yeah.
So
it's important.
That was buried on page, like 1,700 or something.
Right.
But,
right.
So that was news that came out. And one thing that I was going to touch on, we've just had, for the last 6 months or more, how to play this election and, if the markets, what are the markets going to do? It was kind of like, I'm digressing, but do you remember a year or so ago when it seemed like all we talked about was interest rates and inflation?
Right.
Seems like now we've been talking about is election. So maybe we're towards the end of talking about the election, but
till January, and then we'll talk about the next election.
What's important for our investors and for our clients to know, and just people who are listening in general, the markets want to see a quick resolution. This does not need to drag on.
Yeah.
The longer this drags on, and I would say the markets have a little grace. I would say 24 to 48 hours.
Right.
But if this drags on past Thursday, I think you're going to see some volatility creep into if this gets challenged in the court systems by either party.
Yeah.
It's going to bring some volatility into the markets. As soon as it's resolved, things will kind of settle down a little bit. But the markets need calmness.
They need
the markets just want
uncertainty.
Politicians just to get out of the way.
Yeah.
That's
no
the
doubt.
end. I mean,
we have said until we're blue in the face, markets don't mind bad news. They love good news. They don't mind bad news. They don't like not knowing.
Yeah.
And
exactly.
Things that are uncertain. So
Well, on a side note, I'm watching Florida. So, I'm saying this is a kind of funny. It's like a precursor to the rest of the country. Trump going into the election, the last I saw, had like a 6-point lead in Florida, according to the polls. So I'll be very interested if Florida comes in hotter than that, like if he's an 8, if he's up by 8 points, right, or if he's only up by 4 points. And I do think that will help me kind of see the momentum of the country. In other words, are these things we've been looking at for months and months even accurate? Where these candidates are, and like Florida might be the first one that we can kind of see that on, and I'll be interested to see where we are on that.
I'm watching Guam.
Are you?
Real nail biter.
I'm so sorry about that.
Yeah.
But I just thought I'd throw that. Hey, watch out for those hanging chads.
Yeah, no doubt.
In
Yeah,
Florida.
Well, they don't do that anymore.
I know.
Thank
I
goodness.
know.
Chad was fired after that.
But
I have no idea what you guys are talking about. But,
he shows he's how young he is.
I know.
I like the survey. Getting kind of coming full
too.
circle.
I do too.
You know what it does show is that as good as things are and have been for a while, there's still uneasiness.
Yeah.
You know, and I just think that we kind of live in a time right now where, you know, there's uncertainty. There's
which I
not,
think is healthy in so many ways, because what makes me really nervous is when the market's doing really well and nobody's nervous.
yeah.
Right? Then you're just like, okay, this is about to roll over.
No doubt.
I mean,
No doubt.
seriously. And so if there's risks and unknowns and people are, you know, not just making irrational decisions and the market's just ripping, you know, that, then I think that's good in some ways, right? So.
Confusion can easily be brought in with all the rhetoric, you know, about the election. But now we've not even talked about one time today about the Fed's next meeting.
Which is tomorrow.
Yeah.
Tomorrow and Thursday.
Exactly, which is no longer a
They
topic.
announced
It's
on
kind of
Thursday,
funny.
right?
They announce on Thursday.
So,
yeah.
The consensus is 25 basis points.
Yes. So again, markets like consensus, right? So they'll be happy with 25 basis points. It'll be interesting to see what the you know, his message is again, but it's like month over month. I think I've told you this. It doesn't bother me what he says one way or the other, because we're over investing in what he says.
And that's probably why markets were down yesterday. The markets are very subdued today.
Yeah.
I mean, not surprising given the next 72 hours.
Yeah.
So what do you think? Why is the 10-year doing what it's doing? Do you think the market is telling the Fed that their policy is wrong? Do you think that's why the 10 years is just ripping? So the 10-year, for those of you that don't keep up with it, the 10-year is ripping. Like historically, from a beginning of a rate cut cycle, the 10-year is up more than it's ever been.
Yeah.
From the start of a rate cut cycle through.
I think what the 10-year is telling us is that the economy is still ripping.
Yeah, I think it's
inflation is still there, and they need to. I mean, I think we are going to begin a rate cutting cycle. I don't think it's going to be as aggressive as probably the markets want.
Yeah, it's funny because the markets want a rate cutting cycle. Okay, businesses want rate cutting cycle, right? Because we want mortgages to be lower. We want.
Well, when you say the markets, the equity markets.
Equity only. Yeah. Because you want to, you know, it spurs on business development and so on loans, you know, because of free money. Lower the interest rate, the more that happens. So it's not necessarily what's right. And I think that the Fed, there's been arguments, and I'm kind of on the side that I don't trust the Fed, but they've raised them too fast in 2022, you know, very fast, and then now they're going to suddenly just lower them back down, which is the expectation, or people are expecting that to happen. But what's wrong with just finding a good spot and sitting there for a while?
Well,
and seeing what happens to the economy by just sitting still.
We were at 3.6.
I'd love to see that.
What, 6 weeks ago?
Yeah.
I mean,
what's it? 4.3 now, or
yeah, I mean 4.3, 4.2. I mean that's a significant run up.
I think the market is basically saying the Fed's policy is wrong, and that to aggressively begin cutting, you know, starting with a 50 and then following it with a quarter, is a mistake.
It's too much,
And
I mean, I'm telling you, the markets wouldn't like it, but they literally could go the rest of the year and not cut.
Oh, I agree.
And the economy would be just fine, maybe even better.
I agree.
Markets wouldn't like it.
No, I agree. I agree with that, 100%. But it's like, again, I think we put way too much credit to the Fed. You know, it's never in my career doing this.
They get too much blame,
and they get too much credit.
credit.
Some of it, I was just looking at. You know, the 2-year and 10-year are uninverted.
That's correct.
Right, so we're no longer inverted. So some of that's also maybe the market just trying to get back into a natural, normal, you know,
which we haven't had for so long. But
that kind of goes to show you that if you just kind of leave things alone, things will kind of revert back the way they're supposed to be. Now, I'm not saying that the Fed doesn't need to at some point.
Capitalism 101.
Yeah, freshman
Politicians, Fed officials, anyone in power, all need a little dose of humility.
Yeah.
And
Yeah.
just, the whole like, hey,
Market forces can work.
Exactly.
Can work.
Exactly. It's the natural cycle is much better than a forced, from a
Yes.
federal.
And a lot of
policy
times
cycle.
you're just the more you get involved, you're just either delaying or compounding the current issue or the future issue, right? You're not actually fixing it.
Yes.
Exactly.
Yes.
So, all right. Well, thanks for listening to us ramble for 30 minutes. But.
Just a reminder, as we always like to do, and we probably should do this at the beginning, but give us a like, give us a thumbs up, go subscribe to our YouTube channel. We like putting out content throughout the week. So if you like what you see, tell a friend, tell a family member, but definitely subscribe and like what you see.
Tonight's the night. Like I don't watch mainstream media at all. Like we don't really watch just television at all. We watch some shows and stuff. But tonight I will do a year's worth of catching up and the amount of Fox and CNN and all that I'll be watching.
You know on YouTube TV for sports, you can watch 4 games at a time.
Yeah.
Man, tonight I'm hoping that I can
have like different
I can have
boxes.
all of the news networks.
It'll be funny to see the different reaction from,
Yeah. I'll be
interesting.
channel surfing.
Hey, a big night, but let's one thing to kind of leave it on, just being thankful that we live in a country where we have the freedom to show up and vote and have our voice heard. So never want to take that for granted, for sure. So we're looking forward to next week where we can talk about something other than the election, maybe brief topic on how the election unfolded.
Hopefully the result
Fortunately,
will be in.
we'll have a new president
Maybe,
elect,
hopefully.
and we'll kind of know the makeup of Congress.
Yeah.
I mean,
we should know the makeup of
be
Congress. Yeah.
pretty exciting time.
Yeah.
Yeah.
So
Go out and vote for sure.
yep.
Yeah, exactly.
As always, we appreciate you guys checking in and listening. Give us a like, subscribe, and we'll see you guys next week.
Have a great week.
The hosts of the Market Moment podcast are employees of Mach 1 Financial Group, LLC. Mach 1 is a registered investment advisor located in Rogers, Arkansas. Mach 1 may only transact business in those states in which the firm maintains a notice filing or has qualified for an exemption or exclusion from registration. A copy of Mach 1's current written disclosure brochure is available through the SEC website and available at disclosures.mach1fg.com. Thank you for listening to the Market Moment podcast.